Welcome back for another top-notch video. This week, guys, I'll be talking about the week of September 9th through September 13th, halfway through September. As always, our channel is about the TSP and Roth IRA / 401k retirement accounts. We go over for the TSP the C, S, I, and F funds. For Roth IRA / brokerage accounts / retirement 401ks, we go over the ETFs IVV, VXF, EFA, and AGG. As always, these funds equal each other, and the funds that they follow in the markets is the S&P 500, the small caps, international markets, and bonds. That being said, we kind of go over a general overview of the funds, and once we do that, we go into a technical analysis of each fund. The first thing we're going to start off with for the week is we are going to start with our analysis. So when we look into it, this week we saw markets kind of change for the most part, so I'll go show you what those look like. Here that we have it here. So we did have an up week, big week for the S fund. The I fund also was about 2%, whereas the C fund was only 1%, and the F fund had a pretty awful week this week. So the F fund is kind of struggling this week, whereas all our other funds are doing very well. Our funds are up 20 to 20% up for the year for our top funds. That's really good. Even our life cycles are now above 15% when markets usually average around 8 to 10% a year. So this is fantastic. This is a really good year, even though we've had a lot of volatility, a lot of good things going forward in that. Here's our charts for the week. So as you can see, if you instead of a percentage, you want to see it on our charts, you can see that, of course, our funds did do very well for this week, so things are going very well for that. I use these charts basically based off of TSP Talk, which is a website. Please go check them out if you're interested. The next thing we're going to look at is the CCM market model. They have a YouTube channel. Please check them out. So one thing they like to compare it to is they like to look at historical models and looking at things of the past. So based off of that, they like to look at where we are at today. So as you can see, based off of what we've had in the past, this is 2019 here. As you can see, a lot of really up and down movement in here with our moving averages. These are all the moving averages, and this is price, by the way. And so a lot of indecision of, are we going to break to the upside or the bottom side of this? Upside obviously is a top bear market, or I'm sorry, a bull market, whereas the bottom side would be a bull or a bear market. This chart, for the most part, reflects a lot of these cases back in 1987, 2011, 1998, and 2016. As you can see with all these charts, had some indecision in here with the moving averages, came from below, indecision in here, and rose above. All right, this one didn't come from below. We had a lot of indecision here, or came from below, a lot of indecision here, and then rose above. Came from below, no indecision, rose above. Came from below, some indecision here, and rose above. Same here with our case here. We came from below, we had some indecision in here, and now we're rising above. This is a good place to be. So that being said, we want to be in our stock funds for the long-term charts. And if we look at the bearish cases, you can see that our charts do not reflect that at all. So bearish case here, below the moving averages moved lower. Bearish case here, below the moving averages sloped down. Okay, indecision here, moved down. Indecision in here, moved down. Big move down. These are all bearish cases in here. And in 2018, we also had a bearish case. So keep that in mind. 1 year from now, you can be above and drop below that. If we do, we want to make sure we safeguard our capital and keep our gains for what we've gained for the year before we see something like this. But charts don't look like that right now, so keep that in mind moving forward. Moving into some of the analysis, some folks talked initially about the yield curve. It's important when, and these are the TSP talk comments from Tom. Check out their website. Basically, back in 06 where the yield curve inverted, it was 2 years prior to that before we actually saw any bear market action. So as you can see, we had quite a big increase in our stock funds before we had that crash. So this is a very early sign of the markets. We could be seeing something like this and then potentially not see a bear market for 1 to 2 years or 5 years. We don't really know. We like to pay attention to the shorter term charts just to give us those signals, but it's a good early warning signal, something we want to pay attention to, something we'll be looking to as we move forward. S&P 500 or the C fund for the week general overview did very, very well. We've just seen this chart move up and up and up. We're looking at maybe a double top here. Big open space here, so we could see a possible pullback here. If we do see that this week, we're going to probably end up rebalancing. We only have one move left for the week, so we'd like to rebalance to the C and S fund. We're currently 100% just the C, so we'll have to see what we can do with that. With the S fund, another huge rise here from the S fund. We shot above all our moving averages. Looks very healthy above all these moving averages in our trade channel here. Doing very well moving forward. We'll have to see where that goes. Probably we'll see a retest of these moving averages moving forward. And like I said, if we do, try to rebalance a little bit, or we might see a double top here. So we're waiting on that. EFA or the I fund, we did see a lot of open gaps in here. The fund's been moving very quickly. We do have an open gap up here. I wouldn't be surprised if we saw this get filled, and then it would move back down here to fill some of these other gaps. So just keep that in mind. Getting kind of overextended on this EFA chart, but overall very good. We did have some funds in here at the beginning of September. That was a great time to invest. We did our initial monthly contribution in there, so that was a really good time to have. We had about, I think, 40%, so that was not bad. We saw some good rise out of that, but we're looking to rebalance once these charts hit some of these open gaps. Finally, AGG was not doing that well. Obviously, on our weekly charts, we saw that really come down. Thought we saw a big breakout here, and it ended up coming back into the trade line. It's down below its 50-day moving average, still between the red and the red lines for the trading, and this goes all the way back to November. So quite some time. Possibly could see a little rebound here. Wouldn't be surprised with some of the gaps and the upward movement we've had with stocks. If this did a little rebound, stocks came down just a tad. I wouldn't expect more than a 1 or 2% in that area. That would keep us right around in this trend line here, as well as be a good little drop for stocks as they consolidate gains. Moving on to our markets for the week. So with our markets, the first thing we'd like to look at is IYY. This is a general market fund. This controls all market stocks and participants. It's an overall broad index to kind of see where our charts are going towards in the future. So we'd like to look at this and do a little technical analysis on it, and then make decisions off our indice charts. So with the IYY fund, as you can see, a lot of consolidation, guys, for quite some time, honestly. We've seen this come back quite a few times. Hopefully we can see it rise a little bit off of this. Overall, we are above our trend lines, which is good. Things are good moving forward. Looking at it from a chart perspective, technical analysis, as you can see on the weekly, we are almost out of the woods here. PPO line is about to cross, the blue line is about to cross our moving average, the red line here. Price had a big move up. Weekly chart is starting to get towards that green again. Hopefully we see a green switch and a crossover this next week. That looks very good on a long-term perspective. On a medium-term perspective, charts are in the green, doing very well, no issues, no concerns. And on the very short-term basis, we did see that 4-hour just kick down a little bit on Friday, so looking for maybe just a tiny tad pullback, maybe like 1.5%, something like that before we see this chart continue. Something like this or something like this, that would be a really good time to probably rebalance with price for our general market indice funds, because we only have one move this week. Moving on to our actual funds, we're going to move on to IVV or the C fund. C fund looks very similar to IYY as it usually does. A lot of support down here, so we're doing good there. We're in our trend lines, very healthy looking chart. No issues or concerns at this time. With with IVV or the C fund on a chart perspective here on a short-term basis, we are moving down just a tad bit here. Our DO went from 240.49 to 2.14. Moving down just a tad bit there, but overall not too bad, not too bad. On a midterm basis or 2-day chart, looking very healthy here. PPO line or the blue line is above the red line. Price is moving very good up in a very good, excellent direction. Moving towards maybe that double top, we'll have to wait and see off of that. On a weekly chart, again, like IYY, chart looks exactly the same, very, very similar. Hoping to see that cross above there. We get a couple weeks, some good upward movement. We've already had some percentage gain on this week month historically weak month of the year. So we'll have to wait and see that, but I think we could see possibly another big move moving forward going into the rate cut this next week with some of these funds. Moving on to VXF or the S fund, again looks very similar. See a resistance line here at the 120 area, so we'll have to wait and see if we can cross that. If we do, I would say we could probably get up to 123, 124 in this area before we start hitting resistance again. On a tech basis with that chart, if we look at VXF, looks very similar to some of our other charts. Long-term basis looks good. The second week down here, so real positive. This is a good sign for a long-term basis. 2-day basis is up, and on a short-term basis, dropping down a little bit. Since we don't have the extra move this month, we can't move on this. We'll have to wait. So we will stay in equities. We'll take the small hit if there is one, and rebalance when we see this coming back. So we'd like to get into VXF, rebalance just a tad bit for our second move of September. Moving on to EFA or international markets. With EFA or international markets, saw a huge move off here. This is a big move here, big trough that we see above a bunch of these moving averages, moving up to some of these resistance lines here. Could see a little pullback, like I mentioned, due to the space count we see in there. Markets tend to fill spaces. Overall, on a 4-hour chart, just had a 4-hour fake out, so we saw a big move off of that. On a midterm basis, things look very good. And finally, on a long-term basis, charts are about to cross here. Looks very good. Look at that curve, guys, that PPO line. That is a huge change for EFA. We're glad we invested in the beginning of the month with some of our new monies. We didn't have all our existing balance in there, just the new money's in there for a little while, and that was a very good move. Gains some good gains off of that. Why the C fund kind of turned and burned a little bit this month, but overall we're pretty satisfied. And lastly, we want to look at bonds, AGG. It's important that we look at AGG because this also had a big move this week. So with AGG on our chart, as you can see from the beginning of 2019, we have been in this trend line for a very long time. We might have saw a breakout here, and then it didn't happen. It's a failed breakout, and then we just saw an immediate loss of the bond market. When we see something like this plunge all the way down like that, possibly moving all the way down to here, we could see a big spike with our stock market funds. So really important that we stay invested in our stock market funds for the time being. Don't have anything in AGG right now. But yeah, that's a huge move. It's a big move right there in a very short amount of time. On a chart or technical analysis, AGG is not doing so well. As you can see, it just crossed on the weekly line with our PPO, blue over red. And the last time we had that happen was back in October of last year. So almost a full year this chart has been above, the PPO line has been above our moving average. And charts for bonds, for the most part, have done pretty well compared to historical performance. We're close to 7% right now, moving into the fourth quarter, which is really good for the F fund, honestly. So we're going to try to avoid AGG as this spike might happen soon. I'm thinking with interest rates and maybe a temporary time deal with China before the end of the year. I think that's what investors are kind of pricing in here on a long-term basis. So we'll stay out of AGG for now. On a 2-day basis, as you can see, a lot of downward movement, not wanting to be in there with our PPO line below that and our oscillator in the negative territory, moving in that downward slope, and price is following as it tends to do. And then finally, on a 4-hour scale, we've been in the negative for some time, not looking that great. So we're staying out of AGG for now and keeping our money in that stock funds. We're just kind of looking to do a rebalance sometime very soon. Finally, we'll pull up our where we're allocated. So for right now, we have been allocated 100% to the C fund. We got one move left in the month. We'd like to do a rebalance of 50% C, 50% S, and any new monies is going into the C and S fund. As I mentioned last month, we had some go into AGG and the I fund last time, which was an alright bet, but we rebalanced since then to get our monies into the C fund. Overall, we are up 1% for the month, so that's really good. We are not beating markets necessarily, but we'll take 1% anytime we can get it. If you guys have questions, concerns, or comments, go ahead and write them in the comments below. Really appreciate you guys watching this videos. Please like, subscribe, or share. My question for you guys is, how long do you think this rally will last, and do you think that we'll see a little pullback now that we've seen some high price action in the beginning of half of September? Do you think that last half of September will go down? You can write those comments in the comments below. That's another top-notch video. We'll see you guys next time.